Let's talk about a number, $5 trillion. Nope, that's not the economy of some small country. That is the valuation of a single company, Nvidia. Today, we're going to break down how in the world this chipmaker got to be so massive, and we're going to ask the one question that's on every single investor's mind: what on earth happens next?
Yeah, $5 trillion. It's a number that's so big it's kind of hard to even wrap your head around, right? It's an absolutely historic milestone, putting Nvidia in a category all by itself. But to really truly get the scale of what we're talking about, we need some perspective.
And this is where it gets really wild. Take a look at this. Nvidia's total market value has blown past the entire annual economic output, the GDP, of global giants like Japan and Germany. Now look, I get it. A company's valuation and a country's GDP are different things, for sure. But this comparison just perfectly illustrates this massive shift happening in the global economy, away from old-school manufacturing and straight towards artificial intelligence.
So here's how we're going to tackle this today. First, we'll look at the absolutely insane speed of Nvidia's climb. Second, we'll dig into the engine that's actually driving all this growth. And finally, we're going to get into the big debate. Is this a sustainable breakthrough, or is it a bubble just waiting to pop?
All right, so first up, let's chart this unprecedented explosion in value. Honestly, the speed of Nvidia's rise might just be the most shocking part of this whole story.
Get this. It took Nvidia decades to finally reach its first trillion-dollar valuation. That was back in 2023. But from that moment on, things just went into hyperdrive. It rocketed to $4 trillion by August 2025, and then, just 2 months later, it crossed the $5 trillion mark. You heard that right. They added $1 trillion of value in about 60 days. That is something we have never, ever seen before in financial history.
Which, brings us to the next big question. What in the world is fueling this? I mean, a stock price doesn't just explode like that by accident. There have to be some incredibly powerful forces at play here.
Well, it all starts with one thing, really: near total market dominance. As of right now, Nvidia controls an estimated 80% of the entire market for high-end AI chips. Just think about that for a second. Their hardware, their GPUs, they aren't just an option. They are the non-negotiable backbone for running all the big AI models that power everything from ChatGPT to pretty much every major data center in the world.
You can really break this dominance down into 3 key pillars. First, like we just said, their hardware is king, period. Second, they have a reported $500 billion in future orders. That basically guarantees a fire hose of revenue for years to come. And third, and this is the real strategic genius here, it's not just about the chips. Nvidia has this proprietary software platform called CUDA. It's the secret sauce that lets developers actually use the power of their GPUs. It's become the industry standard, and it creates this powerful ecosystem that basically locks customers in. It makes it incredibly difficult for anyone else to even think about catching up.
So all of this, it leads us to the most critical question of all. Is this a genuine technological revolution that we're watching unfold? Or are we just seeing a repeat of history, a massive, massive market bubble?
Now, before we really dive into the arguments, let's just make sure we're all on the same page. What is a market bubble? Well, simply put, it's when the price of something, a stock, a house, anything, skyrockets way, way past what it's actually worth. It's not driven by performance. It's driven by hype, speculation, and that good old fear of missing out.
And listen, it's not just random people on the internet who are worried. The warnings are coming from some of the biggest names in tech. You've got Microsoft co-founder Bill Gates basically saying that a ton of the money flooding into AI right now, it's just going to disappear. He's comparing this whole frenzy to past bubbles that, well, did not end well.
Okay, so if you're in the "this is a bubble" camp, here's the evidence you're looking at. First, just the insane exponential rise is a huge red flag. Then, you've got the price-to-earnings ratio. It's sitting at 70 to 80, which basically means investors are willing to pay $80 for every single dollar of profit. That is way above normal. The valuation also leans super heavily on what they hope demand will be in the future, and of course, it's all being fueled by that investor FOMO. And finally, when you have just a few companies like Nvidia making up such a huge part of the S&P 500, if they stumble, the whole market could feel it.
The parallels to the dot-com bubble in the late 90s are they're striking. Back then, the big driver was the internet. Now it's AI. The hype was every business needs a website. Today, it's every business needs AI. But there is one absolutely critical difference, and you can see it right there in that profitability row. During the dot-com bubble, most of those companies were just burning through cash. They had no profits. Today, the core AI companies, especially Nvidia, are making enormous real profits.
And that one point, profitability, that is the heart of the powerful counterargument. It's the argument that says, nope, this isn't a bubble. This time it really is different.
So the thinking goes like this. Unlike the dot-com days, this boom is built on real money, real revenue. People see AI as fundamental infrastructure, kind of like electricity. You have to spend a ton of money up front to build it all out, and that justifies the spending. This boom is also being driven by huge companies and institutional investors, not just everyday folks speculating. And finally, AI isn't just a cool idea. It has immediate, real-world uses in medicine, finance, manufacturing, you name it.
So, what's the verdict? Where do we land? Well, like with most things, the truth is probably hiding somewhere in the middle. Many analysts believe Nvidia isn't an empty bubble that's going to pop and go to zero. Instead, they think the stock is just significantly overvalued. And that leads to a totally different kind of risk.
And this is a really important distinction to understand the difference between a market correction and a full-blown crash. A crash, like what happened after the dot-com bubble, would just wipe out most of the value. It would send Nvidia tumbling back below $1 trillion. A correction, on the other hand, is a big drop for sure, say from $5 trillion down to $4, but it's a drop that sheds that speculative hype while still admitting that the company has immense real value and profitability. And that's the scenario a lot of analysts think is much more likely.
And so, here we are, right back at the $5 trillion question. Is all this a necessary revolution or a historic mistake in the making? You know, maybe the real question isn't whether Nvidia's valuation is right or wrong today. Maybe the real question is whether we're actually prepared for the world that it's helping to build. The answer to that is going to define a lot more than just the next few years of finance. It might just define the next chapter of our lives.